Thanks for staying on with us. This is the market. Let's focus in on the trade setup. Yesterday was a bit of a wobbly session as we closed in on 10,300, flat with a negative bias. Take it across then to Jayesh, who joins in with a snapshot of the trade setup this morning. Jayesh.
Good morning, Avan. That's rightly put. It was a wobbly session, but I'll tell you what. Despite all the volatility that we have seen in the past few days in the market, it has still been range bound. At least for the Nifty, 10,200 to 10,400 is the broader range that the market has oscillated between. But if you expand the time frame and look at the weekly and the monthly charts as well, the Nifty has been facing resistance at its 200-week moving average. However, with yesterday's close and the month end, it managed to close back above the 50-month moving average. So, that is the positive that the bulls will actually look for. Similar was the case with the Nifty Bank as well. That bounced off the 100-month moving average. So positive news once again for the banking bulls as well. But the broader markets, which had been holding up one end of the market in the last couple of weeks, that actually seems to be giving way with the Nifty mid-cap index. If you have a look at the price performance in the last 3 days, it has been ending off the day's high. So that's a cause of worry over there for the mid-cap index. Few sectors that are looking very interesting. The Nifty IT index is now facing resistance at the 200-day moving average, while the energy and the infra index, those have retraced back to their 200-day moving average and testing the support that they have been garnering over the past few days.
Okay, thanks very much for those details. Let's move on then and bring on board our chartists. We have Dr. CK Narayan as well as Jay Thakkar joining in this morning. Dr. Narayan, we spoke about how we managed to close in above the 50 monthly moving average for the index. What is your outlook on where we're headed? And share with us, where is it that you're finding opportunity in this market?
Good morning, Avan. Good morning, everybody. Market's caught in a bit of a range since the past several sessions, and I think it seems to be waiting for some sort of a news event or perhaps some other market event to take it out of the current 150-point range that it has got locked into. Now, we may have to await the development of such an event. Now, what will do the trick is anybody's guess. But then unless the market is, jolted out of the current small range, trading becomes a little difficult because the small ranges also induce a little bit of volatility. They see volumes drop off, which even heightens the volatility some more. And when volatility is across very small ranges, then it's very difficult for traders to really participate. People like to, be a little languid about their trades, but such markets demands very active trading, which is not really the cup of tea of many. That said, there are still a lot of moves which are, sustaining, and we try to pick up a few in these shows that among the stocks that we recommend. So from such an angle, a couple of buys for today. First up, ACC. I think nice consolidation in the earlier outing. ACC had seen supply coming in at about the 1310, 1320 price region, but that couldn't do very much, and the stock has now made a comeback and closed into that area or slightly above it also. So ACC is a buy at the current levels, targeting about 1360, stop loss at about 1315. ICICI Prudential is the other stock that I would want to recommend as a buy, because that's a stock which has witnessed some very steady buying. One round of advances took place, taking the stock to some 440, pull back again to about 400, 510 region, and I think at the current levels it is indicating that there could be a revival of the uptrend, and so it's a buy at the current levels, targeting 435, stop loss at about 418.
ACC and ICICI Pru both getting a thumbs up in trade. But moving on then, Jay, let's understand your outlook on individual stocks. What are your recommendations? I believe you have 2 sell calls.
Absolutely. Good morning to you, Avan. Yes, I've got 2 sell calls. I would say that Avan, Nifty seems to be consolidating within this range of 10,100 to 10,500, and I think within that consolidation, there might be few stocks which will definitely see some selling pressure and profit booking from the higher levels. I see Nifty Pharma Index seems to have short term, I would say temporary basis, it seems to have topped out because it had actually reached quite an overbought territory, and breaking 10,100 levels on Nifty Pharma Index indicates that there can be some further selling pressure. As far as index is concerned, I would say yes, the stocks within Pharma's index as well will be heading lower. So Cadila Healthcare has clearly provided a breakdown from its uptrend line support. The stock has witnessed a sell crossover in its momentum indicators with a negative divergence, wherein most of the pharma stocks, I would say, Avan has clearly shown that sell crossover with a negative divergence. There is a good risk reward in Cadila Healthcare. One can sell this for a target of 340 to 335 with a stop loss of 350, 362. And second sell recommendation is on Hindalco. In fact, in last trading session, we saw a good bounce back in metal stocks. Metal index, in fact, closed somewhere around 1990. But I see a resistance around 2000 levels on metal index. And as far as Hindalco is concerned, I would say that on the early charts, we saw clear 5-wave declining structure. So on the upside, we have a resistance at 152. And I'm expecting another 5-wave declining structure on the lower side. I think that the bounce is over in Hindalco. It's offering a good risk reward in the selling. So I would say that one can sell Hindalco targeting 140 with a stop loss of 152.
Okay, thanks very much. So that's alternate strategies that Jay and Dr. CK Narayan have just flagged off.